If you look at the initial decline that we had, the weeks of, nobody even remember anymore because everybody's so focused on to the upside. It's always like this. Um, Look at 7.3 here, 7.3 here, 12.7 here, and 5.5 here. So what does that really tells you? It's just I mean, looking at these two highs and this all-time high, which is 450, 155. Dow closes closed the week with an inside weekly bar. So does the small cap. You see? You see, kind of mixed bag. The market is just uh, Russell 3000. They have Russell has a 50 index. It has 2000 index. It has a 3000 index. Um, the 3000 index market breadth is terrible. So it's small caps are very hard to fight to the upside. Um, there's nothing bearish here, to be honest. There is nothing bearish. If you see something, you can let me know. I mean, I could change my view, but I just don't. There's nothing here. But we'll see what happens. So daily wave counts, like the daily swings, they're all up except for this one. This one is still struggling. It needs one more higher bar. This swing is still down. This is up. This is up. This is up. This price action is, I'm like, look at this. See, when you go to a weekly time frame, it's just like, okay, looks like 1 or 2, 3 weeks, but 1, 2, 3 weeks is 4 weeks makes a month. But now if we go from day to day basis, like, that's what everybody focus on is, okay, the market selling off, market going up and this and that. But look what this thing has been doing here. And pretty much all the Dow 30 earnings are out. And if you look at the index to itself, ETF, whatever you want to call it, hasn't done anything. It's just literally sideways. So Nvidia reports earnings not this week, the next week, and well, I'm pretty sure that everybody would be had a big eye on Nvidia, see if Nvidia is going to tank the market. But at the same time, Nvidia's down, Apple goes up. Apple's down, Nvidia goes up. It's just I mean, to me now it seems starting to look like because I've been if you look at Apple and Microsoft and Qs, right? They always mirror like I'm gonna show you this way because I've been trading these stocks for a very long time. So if you do show you the got Apple, Microsoft, and Qs. So let's do year to date. See, Apple has a much better relative strength compared to Microsoft. The Qs are up there. So if you look at Q here, and then we can throw See, leftover scale, we can do Apple. Look at the difference here. Make this thing as a pink. You see, here's your QQQ right there. Look where the Apple is. And look where Microsoft is. So what is actually pushing Qs to the upside when the top two leaders are not actually doing much? Okay, let's throw NVIDIA. There you go. You see, here's NVIDIA right there. The only thing that I can say right now that is helping the Qs is these two stocks, not this. Look where Microsoft is going. It's not doing anything, you know? It's very, I don't know if it's very very weird. Very weird price action. This is how price like um usually like when you look at the Qs here in these bars, you see this Apple, you see how they're trailing to the upside. You see Qs are going up, so does the Microsoft and Apple. Yeah, this is I don't know what the hell happened here, to be honest, right there. That's a mess. I'll catch up because I know there's these stocks, they're I was talking about, I don't know if Apple running right now, if Apple's gonna dip and then Microsoft is gonna take over. Because I'm starting to see a lot of these um look back here. For years, I know Apple, Microsoft, and QQQ, when you put all three wave counts all on one monitor, like split the monitor in three, you have Apple here, Microsoft here, and Q's here. Any time frame when you look at them, they just all look the same. So it was very easy for me to even make the wave counts over the years as well. Like, okay, I was like, if I will make a Q's wave count, it's going to be look identical the same way as Apple or Microsoft. Yeah, it's not here. It's just a little bit tricky because this is much easier to make a wave count like this that follows the same, index or the ETFs. Look how Apple was down here. That's when the Apple took like a what, a 17, 18% dip. That's when Microsoft took off because of the AI. I mean, if you look at here, look like how strong Microsoft was compared to Apple and Q's. You see all the strength? And then here, this is exactly what we looked at on the wave count, right? Looking at this green, just looking at this as some sort of a triangle, I believe, but we'll see what happens. Yeah, overlays definitely helps if you want to make sure that because every stock is doing what is either gonna outperform the index, benchmark, or is underperforming the benchmark, right? So if you're long, you're looking for a stock to outperform the benchmark, and that's what you wanted to do. So yeah, this is not. It's it's weak, but it's not as it's just sideways chop. That's all it is. Eventually, I don't know. There's not any hard sell rating on Microsoft, as I can see, unless you could find something. But oh well. So where we at? Daily time frame. We'll see. We got 4 days to go this week, and I don't know if this is some sort of a triangle here as well. We just go like this. One, two, three, four. Take one more dip down, and then make a push up. This is we can watch. Up or down because yeah, it's not easy to bet against the bet against the market, to be honest. If you have this by Wednesday, if you're in a stock, let's say you enter a stock on Monday, and if you happen to see like by Wednesday close to a Thursday, like Thursday by around like noon time, and if the price really hasn't made a new like the weekly time frame hasn't made a new high, most likely the stock just gonna close the week with an inside week. And they don't really come that often, as you can see. Look, this is the first week from all these previous weeks except for this. So we got 3, 4, 5, 6 weeks. After 6 weeks, we have managed to have an inside weekly bar. This one right there is the same way. 1, 2, 3, 4, 5, 6. Same thing here. This one, 2, 3, 4, 5, 6, 7. 3, 6, 7. Yeah, so these two are side by side the same way. We need this. If this can make the same way what the other ones are doing, that would be nice. Same thing here. So that would be all like all turns like this. You still got some room here for this price for it will still again it will take several weeks because this is one weekly bar to come right back like this. And then if this breaks, so does this or this, and this will be the last one for a rally because it's lagging behind compared to these three, as you can see. So because still got this much of a room left to get near to this previous swing high right there. They're almost there, all the other three. So we'll see how the week goes. Um, well, what's gonna do? Monthly is fine. Seasonality is okay. Tesla does look like if would we a 17? We're right there. It's, I mean, I know we had the weekend game, long weekend. If you look at a price action of Tesla of this month, the seasonality definitely had a little bit of a weaker start, and it takes off here, you can see. So, I mean, we need this part to play out because looking at this to this, it's shows that Tesla definitely had a weaker start and it goes up. So we're gonna watch this, see what happens next 2 weeks until the 29th. It, seasonality definitely is in favor now. Okay, so that's one positive sign. The second positive, the thing what we're looking for is the rotation. Okay, the rotation is still lagging right there. Okay, so it needs to form a hook. It will, because we all know that this is not going backwards like this. Worst case, it can come down here, but it will turn up. So these are a Russell 50 index. Okay, Russell top 50 index. So these are 50 stocks that I watch every day. So I'm always I drew this box. You can do it manually or just you can make it smaller or whatever. Just make a little bit of a we want to find something that is a little out of the box and see if we could find some momentum on a stock and we can try to play to the upside. So that's why I wanna stay long Microsoft on a spread to see if we could get some upside. You got Nvidia here, Apple here. Here's Broadcom. Very strong northeast direction right there on Broadcom. Broadcom is just struggling to break that 235 mark. It's crazy how stock is backing off from that number over and over again, days after days. Yeah, there's a liquidity sweep this Broadcom needs from there. There was a new, I think the news kind of, I did found this yesterday. TSM is considering a 20% stake in Intel Foundry Service with Qualcomm and Broadcom, also eyeing investment to secure chip production. You know, I love Broadcom. It's a very good company. So what we have here,
So
AMD gonna,
interestingly,
huh?
Intel stock went up like 20% in one
Yeah,
week.
yeah, I saw that. Intel got a bit of a pop. I mean, love it or hate it, AMD is ready for a bounce. It's definitely ready for a bounce. So I'm gonna show you one um Micron. I'm thinking about putting a bet on Micron tomorrow. I'll show you a wave count. Comcast here, AMD here, Tesla is down here. So now uh, with Tesla, right? We have seasonality, which does have a positive sign for the next 2 weeks. We have an RRG here that has not formed a hook yet, but it will. We have to wait for it. The week that Tesla just had was a flat week, right? And it put a huge, long legged doji weekly candle. So we gotta go here. This was, yeah, that's the daily chart that I was. Look how the time relationship has been working with price and time. 17 here, 17 here. Look at the 17 bar from this high of 440, whatever, just make it even, down here to this bar. That's exactly where this mean divergence signal triggered right there. The last time I had this blue mean divergence signal on Tesla was back here. 2024. That was failed. That was a good one. October 31st. And look how many years and months it took for this thing to pop again. So the bottom line is for Tesla, I mean, if we look at the weekly time frame, the week that Tesla just had, look at this weekly candle right there. And now look at the open 356.21. That's where the stock opened on Monday. The high was 362. The low was 325, as we all know. And the close is 355.84. It opened at 356.21 and it closed at 355.84 after whatever all the news that, he's not doing enough, or he's, what Elon is doing and this and this and this. Stock just literally closed flat, but it burned, I don't know, millions worth of calls and puts on both sides, premiums. It's just a flat week. It did put a, and then when you look at it, it's just the the candle has no body. So I think we're okay with this low, to be honest. So if we hold this low, 320, whatever the 325, we should at least make a room back here. We need to break this trend line right there. That's the only way you're going to be able to see more upside, you know? So the swing is down, okay? The swing turns down here to this 373.04. That's the low right there. And I know this is gonna be a resistance level right there because you have the initial swing low of 373, and then you have this lower high of 440, and then you had a lower low at 325. If this is only a three-wave decline, now we need to have at least of 8 swings from this low, which we're going to track on the wave count. Here, you can just only look at a daily bar. You cannot do anything. But if we look at the price and the time, it's definitely working really good so far. That's exactly what the 17 bar was ended. So if we take the previous 17 bar decline, you had a 29% upside here. On the previous side right there, that was a 32 point. This was 17 days as well. That was a 32% decline. That rallied 25% as well, and then it took another leg lower. You see, so 17th bar here, you got this swing. 17 bar here, you got this swing. Now we have again 17 bars here. And now we've managed to have 2 positive days with the flat week. This is the daily time frame. So again, swings, time and price sometimes nails it almost, really, really good. That's why I always tell you that I need Gann more than Elliott, to be honest. Timing is everything. And that's what and being in options, that's what we're all fighting for. It's the time. And if you look at them here, oversold RSI is 17 bars, oversold RSI is 17 bars, oversold RSI is 17 bars, so you're not going to get this on a 14 RSI. This is the only reason I would follow 14. 14 is the worst one. The worst RSI to follow. It lags so bad, but people are 14 RSI looking for everything on those. I don't need 14 periods. All I need is five. So got these little cute symbols here on Optima. I just was playing around. I was like, put a little side in here. And that 325 low and 350 was again, I mean, it's just a flat week. You can't really make anything out of a weekly candle that has no body, to be honest. It's just undecision bar. But a long-legged doji has a potential for a reversal. So I did post this thing, a thing on the long leg doji pattern has the advantage of signaling a potential price reversal. The pattern is formed when the opening and closing price are the same and there is significant price movement during the trading session. This indicates price indecision and may result in a price reversal. So if there is a price reversal, but we still need to break this in the next week or two to make a room to the upside. That's the only way you're going to see that is to break this trend line like this. And the swing has to, when how are we going to break this? We need to close above this mark. I want to see a daily bar that open and close above 373. That would that will turn the swing up. We need swing to turn, to turn up. Right now it's not, it's down. Where's my see, it's false. So this has to turn green. Then we'll have a swing. So for now, we're gonna just look for this 363, 373 area right there. This definitely is gonna back off from 373. That's your first initial swing low right there. 373, 373, sorry, 363, 373, 382. This, we have a bit of a room here. And then from here, it needs a strong push to the upside to break this trend line. Then we can consider or look for upside. That could come if we would the the RRG will improve, if the momentum will start to pick up, and if the seasonality is what we're looking for the next 2 weeks plays out. So I see the positives. So we'll see what happens the next 2 weeks. We're gonna find out by the end of the end of the month. So worst case, if price kind of goes a little bit more sideways, I have the diagonal that I put it in there in case. So can take advantage of the time decay for the next couple of weeks. So we can do that as well. Worst case, if it's gonna take one more leg down, I mean, I don't know. We just gotta break this 325. It's gonna have a pretty good chance. It's probably gonna go right down to 300 if this thing is gonna break. It might consolidate this. So if I simply take this, whatever, 3, 3, and 3, right? If we just do this, 3 here, 3 here, and 3 here. So WXY here, look at this. That's how you nail price and time. You see this daily bar right there? See this fib with this? That's your price. This is your time. And then from here, you want price to move up to hold this low. You see, the next day, we didn't make a new low. We closed the day with an inside day because we didn't make a new high, didn't make a new low. And then the next 2 days, it made two new higher highs. So this is good. But needs room, like looks like a bullish wedge to me, but it has room to, it has this much room to get out of this channel. It needs to break this channel. So we're gonna watch this 373 area. To see if the price can make his way out. Worst case, if it rejects, comes right back down here, then we have 50% sitting at 321. We've already broke 355. And then 61.8 is at 291. So if that's the case, then we just said I have to go with an A, B, and C. And we don't need that crazy looking Y wave. So complexes are always like this. When you have a shorter W, you can have an extended Y. When you have an extended W here, then you have a shorter Y. That Y will end 61.8 relationship to a W. So I have these are daily bars. I have them here. I'm doing it both ways. Okay. One of the guy was asking, like, you have to pay attention how the labels are. So I've got A here, B here, and looking for a C. So we have 1, up in 2, down in 3. Here's a 4th wave. Take one more push down in a 5th wave of C. That will come toward it will come toward this zone right there. Okay. The other one, I have it here as the same thing. W, X, Y. Okay. So the only difference between C wave and the Y wave is C is an extra wave. Okay. It always subdivides into 5 smaller waves. Y wave is a 3-wave wave, 3-wave subdivision. That's the only difference. Because when you look in as a flat, is 3, 3, and 5. When you're looking as a complex, 3, 3, and 3. So the only difference between these two is this subdivision right there. Is a 5 here and 3 here. So I don't know which is going to play out, but I keep like when I will get to this kind of a part here, I'm just gonna put both of them side by side to see like, okay, well, either a C or is this the Y wave? See, within a C right there from that B, you still need 5. C just, that whatever that guy was even posting that thing, I was like, dude, C wave cannot be a 3-wave move. So your C still got to subdivide into 5 smaller waves. So I have that here, 374 with the invalidation here. So if this is some sort of a 4th wave here, it has to make one more push to the downside. Okay. That's if we're considering Y. If we take This, this one suggests the same thing as well. We have one here, two here, three, fourth wave resistance here between 38, 50% zone right there, and takes one more push to the downside. So those two corrections either go with the C wave, either I go with the Y wave of C, is still telling me there is one more push to the downside. So how do we know that which one is going to play out? The invalidation mark is the one that's going to confirm you the low, if this low is in or not. In this case, we need to break 384. The price needs to go up to invalidate, meaning the wave 4 cannot enter the territory of wave 1, right? So that's the hard set rule. So invalidates here at 384. This one invalidates at 374. So it's only a few points. By that time, if the price does manage to get here to invalidate both of them, then I'll just put 325 here, make this thing as a three-way move, and we're done. And we're just gonna make our way back up. So from here, I have these two. I'm gonna leave the way it is because I don't change much. I'm trying to count this as a five-way move from the low. Keep this thing at 325. Like, okay, if that is the low, okay, and if we did manage to break those two invalidation, okay, can we count 8 swings from the low, right? We have to look at all different ways. So like, okay, what do we have? We have 1 here, 2 here, up in 3, down in 4. Here's your 5. So that's 5 right there. Okay. So after 5, what happens? We need 3 more to the downside. So now we take this. So Friday low was 347.43. Look at that. Almost to the penny. So now if we take 5 up from this 325 low that we looked at and take this sort of like a 3-wave decline, something like this, or you can put as a WXY, doesn't matter. And then from here, we need to move up to the upside. So from here, like if this low holds, and if Tesla managed to break 362, the minimum upside is 386. We just simply take the distance travel here in the first projected from the wave 2, give us a 3 versus 1, 100 at 386. Okay, so that's one. The one more thing we could do, what we can do is we can call like something like this. Okay, so we basically go put as an A. Correction is always going to be damn subjective. So this is what you have to be super patient when it comes to. So you basically take this as an A, this is your B, take one push down here in C, and then from here you make a move to the upside. But the thing is this, you see, if this thing is going to come back down here, as long as we hold this low, you see the 100% is going to start coming down. You see that? It's going to move. So fighting a smaller time frame is never an easy thing to do, and I don't recommend nobody do 50-minute Elliott wave count anyways, unless you have a years and years of experience. They get really messy really fast. Okay, when you have money on the line on a trade that you wanted to, either you going up or you coming down, you don't want to mess around in a 15 minutes wave count. It's gonna cost you a lot of money. I don't I mean, you see me, like I hardly ever post 15 minutes wave count. I keep it for myself. And I know like just I don't want to confuse no one. So I'm fully aware that it could change, because these are 15 minutes bars. And each 15 minutes bar is just to sit and fight them. It's just not easy. I'd rather just stay in this time frame gives you a much clear and better read. So you really don't have to count. It's not easy just to sit and just making these small cute adjustments over and over again. And you in a trade and you just keep thinking and just keep changing your wave counts or every 15 minutes bars. It's not how you don't do that. So we'll see. I mean, if 38.2, I mean, this is that's beautiful low. We can take this 386. This 386 here will definitely invalidate this one, that 100% measured move. You know, that 386 from here and this 374. So you see, like you have to, this is not an easy stock to, but if you can, um, I mean, last week, if you remember that we had a fib here at 326 and I took a screenshot as well as posted as like 326 less and we were here, I believe, somewhere around here. And then we made that push to that 326 and I added that another call. And I wasn't really thinking straight, I will say. I should have done a spread right at the money, to be honest. Because I was in this 400 calls right there. But the sell-off right there, I didn't um, the implied volatilities had a pretty big spike. So the premiums definitely got pretty expensive. And then you buying a high premium this much out of the money, okay, like 75, 80 points out of the money. That was like what, 20, 21, 22 delta trade. And then the Tesla's starting to move higher, and then the implied volatility starting to come down. Oh, it's like, oh boy, those ones has like 70, close to 70 delta per day. I don't hold trades for that kind of a crazy deltas. Sorry, the time decay. So it would cost me every I have like what 3, 4 calls every single day. It would have cost me $70 just to hold those 400 calls. It doesn't matter where the stock opens. If the stock can open 30 points higher, I'm gonna pay that $70. If it opens lower, I'm gonna pay the $70 again. Each day, it's gonna cost me $70. So if you hold a trade for 4 days, okay, that's $280 just to hold those 20 delta trades. I don't, that's why time is, I know that when you try to time a move to the upside, you just want to keep that damn negative theta as low as possible, so that's why the butterflies and diagonals helps you the most. You're not getting hurt with time. You can play the expected move, whichever direction the stock will go and whatever you're betting, but at least it's not costing you time decay, you positive theta. I mean, why wouldn't you be in a trade for a month and a half with a positive theta and you buying calls and puts and you buying calls out of the money? Who wouldn't do that? But as soon as you're gonna start shopping for 375 and 385, yeah, those calls, and depends how much do you size up. Yeah, those are gonna call you each day. It's costing you money. So right from the start, the bell is gonna ring whatever negative theta that you had, that's it. You're gonna open the position that much lower, and then whatever you can gain, you can gain. When if you have a positive theta by a dollar or a two, or if you had a flat negative theta, you get a 10-point pop, you get paid on an exact 10-point delta. You have no time decay, so pay attention to that is very important. And I'm me personally as a trader, I don't I cannot see myself paying $70-$80 worth of premiums that, you know, 80% of them expire worthless anyways, to pay this much time decay. Hell no. I'm not paying them $300-$400 worth of time to be in a trade for 4 or 5 days. It's just ridiculous. That's why most of these traders gets hurt. They're so focused on being directional on a trade, thinking like, well, I want to go up to 386. Well, we don't know that how long it's gonna take to get to 386, but what kind of a time that it will cost you to get to that mark. But they just keep adding, averaging. Like, yeah, I'm just gonna get myself the best entry possible. Just keep throwing more risk on the board. That's just a dangerous way to trade. Adding thing is, I do it, but that happens once in a blue moon. Yeah, I'm not a very big fan of adding risk. If you're wrong, you're wrong. Not the end of the world. Micron. I'm interested in the stock. I made it this just this wave count. We have a pretty nice 5 waves up. Pretty deep retracement down in two toward the 7 8.6. This 7 8.6, look at this. It's a very thick zone. Right there. This. So if we have 5 up, 3 down, we had a pretty nice huge pop right there, as you can see. We just got out of the channel now. Okay. I'm willing to bet on this one tomorrow. I'm always looking for 8 swings and so we can catch this third. So if we would do is what we will do is like if we have 5 up, 3 down toward the 7 8.6. If we just simply take a measured move of this, puts us at 115. Okay. So just 3 versus 1. The ideal upside for 3 versus 1 is always 161.8. Okay. So for this price to RRG looks really good. And on the daily time swing on GAN is a 1-2 swing as well. So I think I'll try to see if we could do 110 spread, because we are at what, 99.33, right? So we have 100 here. So we'll do 110. We need to break this low, this high right there. If we break this high, that will be a clear shot to this 115 mark, to 118. To this zone. That's the zone we'll target. Right there. So that's the trade I'm willing to put a bet on. So do like a 100, 110 to take out this high. And if the price does manage to make a push to this 115 mark, I mean, both of our calls going to be in the money. That's exactly what we want. So if this third would come into a play, I mean, it'll move. It'll move very fast. So I like the setup of the one. That's a 2 hour chart. Um, I was looking at the RRG, and that's what I came across. I don't even remember last time I traded Micron, but I like this setup. We'll do a call spread on this. Looks good. 8 swings here. You can see if we can even get to the 115 mark. I mean, it'll be a nice trade. Yeah, we could do two ways we can do. We can either do 100, 110 or 105, 110. So you can do either a $5 wide spread or you can make a $10 wide spread. So both will work. So 105 and 110 will definitely going to be cheaper because you're going out of the money because you're at 99.33. So slightly out of the money, 105, 110. We'll have at least a 35 delta trade. That would be nice. So that'll be definitely going to be cheaper because it's a $5 spread versus you making a $10 spread. And you can always split them as well, you know? Splitting an order meaning like this, you have to decide first of all how much you're willing to to spend on each trade. So let's say you want to put $1,000 on one trade. So you always have to look at this way that not 1,000 all has to go in one single trade. You can split it. Splitting $1,000 is the same thing. Basically, you take a 100 here and 110 here. I do it all the time. So you have $1,000 here, right? So I don't know exactly what the premiums are. What you can do is, let's say this will cost you $4.50 for one contract. So you have a one contract here of $10 wide spread costs you $4.50 out of the 1,000. Then you can make another spread of 105 and 110. Now this one is out of the money, right? That would probably going to cost you $3. So you can just do two here. So you have one contract of 110, 100, 110, and you have two for, I don't know exactly what the premiums are. You have to see it. And you have slightly out of the money, which is going to have a bigger payout anyways, right? The reason why you're doing this, but your cost is the same. Okay, so it really doesn't make a difference that you put all the money in one single strike price. You can always break them as long as you wanted to stay into 1,000. Now, if you want to do a 2,000, then you can split two orders of 1,000 each. The reason why you're doing this is because you want to get rid of the time decay. Remember, the at the money strike is always going to have a 50 deltas, right? At the money strike is going to have 50 deltas. So the 50 deltas that you have at the money, it has more intrinsic value. Okay, so every time when you have more intrinsic value, so the premium are not going to melt or fade that fast as compared to the 105 and 115 and 110 that is out of the money, which has extrinsic value. But the bigger payout is if you can manage to get the price like this, right? But when you go out a month and a half to 2 months out on time, well, you're buying time. So you're buying time. So how do you reduce that time decay as low as possible. So like, okay, fine, I'm betting to the upside, but I just want to make sure that it's not costing me that much to hold those premiums, that I'm long those calls. So that's why I was telling you is like, if you are risking $2,000, you simply split the order in two different strike prices. So it's the same thing. If you put a 2,000 here from 100 to 110, you have all 2,000, you have one single trade open, or you can just split them in half. 1,000 here and 1,000 here. From here to here is 1,000. From here to here is 1,000. So it's 2,000. So your net cost on that trade is still 2,000. It really doesn't matter. So what difference does it make? So if you have four different strikes compared to two different strikes, it's the same trade, but you just trying to NVIDIA. Yeah, I know NVIDIA's. Let me take a look. Um, you always have to think what is the right way to invest. What would be the ideal way? It's not like I'm going all in and I'm heavy in, I'm this and this in, and okay, champ, take it easy. Um, Risk management is very important. I mean, so you can always like the worst case is this that if you have four different strikes, okay, you can always close one side, and then you can just always have the other side open. Meaning that if you try to reduce size, or if you say like, hey, you know what, 2 weeks, nothing is moving, this and this, and I really don't want to sit on this trade or whatever, you can just take off one side and leave the other side open. So you always have choices and always make adjustments to it. But then if you have one single, like where you have two calls, like 100 and 100 and 110, whatever calls that you have, then you just have to reduce size on that position itself. So doesn't matter. Your direction is the direction that you're looking for. It's just a matter of like how fast the move is going to play out. So we'll see when yeah, we're gonna do this. What was the other one? NVIDIA, I don't. I changed the account, then I messing around. This is, I believe, all it is, 1, 2. This is, it still needs to break this 143. It is a crazy rip to the upside. Um, if we go back here, okay, let's move all this. So NVIDIA had this decline, right? Um, from here, now it's $10. Let's do this. It's a daily time frame. That doesn't matter. Now the question is, let's do this. If we put one here, which we can, okay. Now remember, NVIDIA works really good with fibs, really good with fibs. This is the largest decline that NVIDIA had, okay. So from here, from this mark, It's 3465. Now the question is that do we start a count from here? Okay. Can we do this? As one way to look at it. So what do we have here? 3 versus 1, 200, 261.1, 423.6% upside. 3 versus 1. That's one way to look at them. So from this third wave here, again, this is you're looking at daily time frame. That's a very, very long time frame. So from here, we need 5 within this 3. Do we have 5? No, we don't. You see how short the wave 3 is? We don't want to move all the way back here. And look how tiny this 2 is. So we're going to put 3 here and make this a 4th. And this is the extended 5th wave. 3 versus 1 at 161.8, which is fine. 4 is here. That is a possibility. We could do that. Oops. So here's your 1 versus 2, 223.6. Up in 3, 161.8. 4, that's your triple combo there. And then from here, you have an extended 5th wave. So 1 goes here. Oops, come on. 2 here. Your 4th wave here. And then 5th. That's your 3rd wave. That's your 4th. Whatever you want to. It looks like a 3. Make a combination is fine. WX. Divide this thing into a this. So you have 1, 3, 4, and now you need a 5th of a 5th to the upside. So how's the sequence goes? 5, 3, 5, 3. Need another 5. Because NVIDIA from here not doing anything. You start if you really pay attention to the price. See, you put a double top here. So NVIDIA had a double top. I mean, it's just a matter of like when the thing is gonna break. So how do we count another 5? So we basically looking at wave 1 here for of a 1 large degree, long 3rd wave, down in 4. Now look for an extended 5th wave. If that's the case right there, I can just put 5 here. If NVIDIA ends here at the double top, and then we just look for some sort of a correction to the downside, right? So we could just do this. That's your 3, that's your 4, and that's your 5. That's your diagonal right there. So you have an overlap with 1 with 4, 3, 4, 5. So there's your completed 5 waves. So that's the case right there that NVIDIA is trying to come back down in a 3-wave correction to the downside. That could take several months. Now other way we could look at, if you put one here, then two here. It's just a matter of where you start the count. You know, so you can just do it as 1, 2, 3, 4, 5. That's one, down in two. Then you go from 1 to 1, 2. So let's do that way. If so, if this is all it is, so NVIDIA should see rejection here and then start pushing lower. The only reason that I want to leave this thing as here because I need this. This is what I'm watching right there. See, NVIDIA failed after 11 swing. Okay. Higher and higher the counts get, it's going to have a very sharp reversal one of those weeks. It'll take a few weeks. So NVIDIA took out this low, right? 126 made this low here. Now this is a second swing. The only way this second swing will go away if it's going to take out this previous swing high. Okay. So earnings are coming. I understand that. So this cheap DeepSeek news came out and Nvidia sold off, consolidated for a few days, just made another low here. And then from there, Nvidia just managed to rally back to the upside. I need confirmation from here that I can definitely adjust the wave count right away. But for now, to me, is looking for a third swing to the downside. Okay. So looking at the swing count here, what do we see here? We have a double top, right? So what we can do here, we can just take this high to this previous swing low to see where we could find our resistance, 144. Okay, so the 144 and this. So this is where we're gonna see if price can clear this 145, which is 78.6. If this 78.6 breaks, we have a pretty good chance Nvidia is going to take out this double top. So then this swing will turn one to the upside. This two now has to go all the way back up here and make a new high to turn into a one. Otherwise, it's going to stay two. Now this swing right there, it can fail here, it could fail here, it could fail anywhere. As long as this second swing does not take out the previous swing high, okay, this third right there will be in play. Okay, so keep that thing in mind. So Nvidia, I know, is going to an earnings, so it's gonna, it could whipsaw, like, kind of stay sideways as well. It's totally possible as well. But the thing is that Nvidia, right here, so the momentum right there on Nvidia is very strong. So does that mean that it's gonna rip through to the upside? It's totally possible. It's totally possible. So we'll see how much Nvidia will move before earnings, and especially if Nvidia are gonna move the same day when it's going to report earnings. Now, this is just never a good sign. For now, I would rather focus on this part instead of what we did here. So from here, I could just make this thing as a ABC for now. Leave this resistance as is. This is a 5-wave decline. See, this is a 5-wave decline. I can count them. Is this some sort of a 3-way move? Because that's what we're gonna find out. So it's the same thing here. So it really doesn't matter if we do as an ABC move here on the Elliott wave side. Okay. I mean, we're at 138.48. 78.6 is at 143.49. This is 144. You see, the motive wave fibs will never gonna match with any other software. Just it's even the fact that the same high and lows. I don't know how I could never figure this thing out. Why the ratios is it's the same high and low, but it's not that much. You're talking few pennies, but just getting exact print, you don't get them on on any other software like this high right there. You see, like this high right there of 38.2 at 127.80. Look at that, 127.85. Look at this. So, motive wave is these fibs are crazy. You can literally get the lows and highs to the pennies, and you can actually see the price reaction. So if I take a if I take the RRG, okay, it's a very difficult to make this case because if that would be if the RRG from the weakening if it's coming down like this toward the weakening, then you will have something that is has a push that you could say like, okay, it can push toward the lagging quadrant. You can make that case. But if we look at here, that's not the case here, right? So let me do this. And show you on a chart. It's gonna go to default. Compare the side by side. Okay. Now here's the yellow line. So now this is the daily chart. This is the daily rotation. So if I'm going to move that line each day, you will see how much of the rotation has moved. See? I got to stop them because it's highlight. It could change it. So when NVIDIA made a low here, NVIDIA was in a lagging quadrant, pointing this way. So we know that once the rotation comes here, it will make its way up and look from it will change the date here, right there. It changed way in the bottom as well, same thing. 1 day, 2, that's third day. See, for 3 days, Sometimes it's very tricky. See, stock has already start moving up, but it's not giving you that hook right there, what you're looking for, right? So how many days it took? 3, 4, little curve, 5. Now you're starting to see, and the stock's starting to catch a momentum right there. But you see, that's why some of you, the guys who talk about rotation is very tricky. You gotta pay attention. You gotta pay attention to it. It doesn't. Something is down here. It doesn't mean you're just gonna start buying. That's not how it works. So you basically looking at a 15% upside on the stock. Okay, from this low to this, that you had no confirmation here at all. So from here, from 5 days, that's 6. There you go. You see one single day how it makes it. Look at the length of this thing right, because these dots right there that you see on that tail, these are the previous trading days. That's why I've set them at 4. I could change it to length, make it a 5 days. So now you have, let's see. So now this is the the Friday. I suppose Thursday, Wednesday, Tuesday, and Monday, right? So each dot is your previous trading days. So the current hook that you have here is your same day session. So it took 6 days for NVIDIA to turn. See, that's next day went up a little more close. Come on. There you go. So it took 5, 6, 7, 8. From 8 days, that's what, 2 weeks, right? No, 8, well, 5-day week. So yeah, so it's 8 days. So 8, 9, and 10. That's where it ended on. End the day week on Friday right there. So now the question is it going to test this 145? So you have 139 to 145. And we have a gap here that needs to get filled at 141. So you have 2 points to close the gap. And then you have 78.6 sitting here. This is where the decision gets made. You know that, right? This. That's where the decision is going to get made in this zone to fill this gap and this 78.6. That we'll see. Now the question is this double top is going to break? Most likely it will. Yes. So if we're going to bet on this to the upside, okay, what are we looking at? Let's say we pick an entry here. Oh boy, see, it's a downside risk. It's going to be huge. Put a, let's say, consider here. That's your entry. So you're taking a 13% risk to target 160, taking out this double top, 20 is to get here. That's your risk profile. So I would do, because you can reverse this. No. Yeah, slightly. Well, you're gonna move. So wait, I kind of like these. I think I'm gonna start making these kind of a risk profile trades for you. Take a make like entry here. That's your target from here to here. So let's target this for now. That's your double top. No, sorry, this. Need to be a double. So you have 13. You're risking 13% to make 20% up to here. But it's not what the swing shows. It's already showing 133 for now as of Friday. So we'll adjust over time. Well, that's your risk profile if you're bullish. If you're bearish, you can entry here. I would use this high right there. Throw an entry here, and then that's your downside target. Get to this 122.45, which is the 78.6 to the downside. So you have roughly close to 7% risk to the upside to make almost 12% to the downside. So this is more attractive risk to reward ratio, right? Compared to 13 to make 20. Yeah, risk is it's the best is always see is this. So you risk 5 to target 10. Remember, I always tell you risk 1x to make 2x. It's your best and the ideal risk to reward ratio. You risk in 1 to make 2x's. When you risk 1x to make 1x, that's tough. That's very tough. That's why you need to look for those ATRs to see what the exact 1 standard and 2 standard deviation moves are. Then you structure a trade based on those. So this is more attractive. This is even more juicy right there. So this is the downside bet, or that if the swing plays out toward this gap, you have to just find entry, whatever. Let's say you find an entry here at the gap gets filled, and then from 141, now your risk goes to under 5% to the upside. Now you're taking this high right there. But the thing is this, when you are earning, this thing can swipe. We don't know how earning plays out, you know? Like how much of the stock is gonna move, and just look at McDonald's. I remember looking at the trade. It was down probably to nothing, I would say. I like the trade was down like almost like 11, $1,200. It was the damn rotation that I was betting that I took a trade on that took such a long time to play out. Look at the reversal on McDonald's. It's like wow, the whole trade, and I held one. I was like, you know what? Screw it. You give me it. The stock has given me that bad of a punishment for that long. So I cut all four of them pretty much at break even, made like 80, $70 or so. But I held that one. So like if it's gonna go, it's gonna go. So I said rotation looks good. Monday morning they're gonna release their earnings, and the stock just got a monster move to the upside. And I'm making like I don't know, $370 or so on a one contract. I would have held all five of them into earnings, would have over $3,000 payout. But again, we don't know that. So that was sometimes you just gotta gamble a little bit, and then I would be looking at like I had a trade which was down almost 11, $1,200. I wasn't even panicking about it. I was just I'm watching the rotation. I was like, come on, you gotta, price gonna make a move. And then now we're getting close to the earning, and that's it. I got the expected move, exactly what I was looking for. So it played out, but that's why I don't panic. If you have a position which is down on your board, that doesn't mean that I don't know. I mean, I don't know how you look at things. It's not how I look at things. I'll tell you how I look. How I look at a down position is down position. I know it's not fun to look at them, but if you have not closed that position, it's not considered as an official loss. It's a paper loss at this moment. It could turn it can things can turn around. Anything can happen. As long as technicals looks good, I mean, it's just a matter of being patient. Just gotta wait. But if we're getting close to that time expiration, yeah, then we're running out of time. That's it. Now the position got toast. That's the only downside to it. So a down position, looking at it as a down position is I know it's not a fun, but at the same time, I'm not gonna get myself all like down over because well I have two positions are down in my board. Well, I gotta look for new trades. I could balance it out. It's just this doesn't mean twos are down, the next 10 will be down as well. So we'll see what happens, what NVIDIA will do. Look, looks good. So if we go from here to this looks damn good on the seasonality part. You see, it's the same thing. Slow start with a sell-off NVIDIA had, and NVIDIA just recovered, like pretty much picking up in a second half of the month. Same thing I'm expecting it here on Tesla. Tesla can just hold that 325 low, kind of chop around here for a day or two, and then just trying to make a move back up. So that could be a positive. That's the positive that I see. This part right there, an S&P 500. Okay. This is the only reason I want to hold ports for now. Okay. I understand we're sitting right there at the top. Okay, so the highs that we're making lately on the S&P is like 1 or 2 points, and then we're just kind of backs off. So in a month and a half, we could catch something. I mean, it'll be okay, but we'll see. Small hedge. I don't, yeah, this is what I'm watching. So we'll see what happens in the next 2 weeks. Okay, so this part here, and then the same thing that the same thing I retweeted from Optima. I have a guy who works always always bugging him. He retweeted this, you see. I just want to see how this thing is gonna play. He even wrote it here. They said there's a 67% probability of gain 100 days after January 20th, approximately 68 trading days with an average return of 1.26. There is a dip second half of Feb. It's a second half of Feb and before recovering into the end of April. So I don't know. I mean, if I go here, this shows a clear breakout. Okay. Here's your August low, up in one, down in two. Here's your three. There's your four. So now from four, we need five smaller waves. One, two. Now we need one, two, three, four, five to make three, then four, then five. So we have to complete five waves. Because for now, this is where the wave count is sitting right now. So can we do something like this? Sort of some sort of this was some sort of a triangle, then I can just move the fourth wave here. Still due for a move higher. Okay. So now if we take this, now let's look at Qs. Same thing. Up, down in two, up in three, down in four. One, two, one, two. I hope it stays this way. It's going to be much easier for me to keep them both side by side, and I want to keep them both side by side. It's very important. Okay, you see that it just looks exactly the same. I got them right there. 3 to 4, 1, 2, 3 to 4, 1, 2. You see, they look exactly the same right there to the. This one's sitting at 539, close at 538. It's a very strong close for the week. I can tell you that. Now, the only thing, uh, I don't know what has to make it as a flat or something. I don't know. We're just fighting this fourth wave. And this fourth wave is just, to me, it just looks like you're ready for a breakout. We just looked at it. This thing it's ready to go. Yeah, it's tough. It's tough to bet to bet against the market, to be honest. Well, 2 weeks ago we caught this sell-off. I closed it. I was like, man, I was out one little over a one standard deviation move. I was like, I'm good. This one, no, this. No, it was this one or this one. I believe yeah, this one. I think this was a CPI or something. That's the last trade that we did. That's what I was talking. I don't know. It's there. So we'll see. I just wanted to very mixed bag. That's what I'm saying. It's just so, which side you wanted to pick, you know? You wanna take a trade based off this, okay? So you do that. So now you consider weaker seasonality takes place in the next 2 weeks, okay? Now you need content. Now you're gonna jump here. Does it look like it's gonna happen? You see, that's where you're gonna scratch your head. It's like, what should I do? What should I bet? Which side you think that will play out? Because seasonality is the average taken for several years, right? But when you actually looking at the price where it's sitting right now, it's just not literally telling you like, okay, well, I don't think the seasonality is the way to go because you got a price sitting at near record all-time high. So now the question is that are we gonna make a double top and then back off? Okay, if we do that, then this four is gonna, I don't know where this thing ends. Either ends here, like it's still due for for five to the upside. So these fourth waves are very tricky, very nasty to play, to be honest. It's okay. I mean, the I don't know what's so negative, because if we look at last week, CPI came higher, market didn't really care. PPI came higher, market didn't really even care. Retail numbers was down, market didn't really even care. It's just market really doesn't even buy the cares about this data anymore. You have three main event after the job report just passed by last week. The market shows zero response, zero. And now with the tariffs as well, with the news that are coming out, market doesn't even seem to care anymore either. It made initial reaction the very first time when he says like, well, I will do Canada with 25 and I'll do Mexico with 25. And then the phone calls happened and then everything went on hold for another month because they're gonna negotiate things, they're gonna work things out. You see, and market just realized like, wait a second, those tariffs are not even going in. Why should I even react or, selling that I'm gonna sell off? The same thing that he's doing now, like tariff news are coming. These are all reciprocal tariffs that he just matching the same dollar amount what they're charging you. You take a car from here to Japan, Japan charges you 70% duty tax. Okay, well, he wants to do the same thing as well. Like, okay, let's play the fair game now. Auto industry is going to get hurt really bad with these tariffs. I could I could see the signs. Car industry is going to get shaken out, you know? So, because Japan is a very huge exporter of cars, Toyotas and Lexus. They're, you know, I know they make Toyotas here as well, but more in Japan, like their own people cannot even afford a Lexus there who lives there. They're like one of their prestigious cars for them. But yeah, there's those auto It's gonna take these tariffs can hit the auto industry hard. So if auto industry is gonna get effect with these tariffs in the next couple months or so, so are we people gonna buy American brand cars like GM, Ford? So how are they gonna react? I don't know about Tesla, but the bottom line is that, oops, that's the cues. The bottom line is this, that this fourth wave in summer is coming. So get ready for that. So this is where the price is actually sitting right from the bear market low. You have wave one, two, three versus one, which is a 6160. Okay, so we're very close. I had a pretty wide kind of have a pretty zone here if this fifth is gonna extend. This fourth wave is coming. So this larger fourth wave will pair with this 10% decline. This is the one that I'm expecting this thing to happen in somewhere around like in summer. So I don't know where this thing ends. It's too much price overlap. But if we can get another, this is not a diagonal for because we have no overlap with four with one. Um, well, whenever the swing will turn down and when I'm gonna see some um, signs of weakness across the board, it depends where the three ends. If it ends here, let's say at 6160, just leave it here. So everything's gonna move. And then you just gotta have to project the four. Four versus 146.19. That would be like a minimum downside. And your 23.6 at 5,500. So it depends where it is. So yeah, see, eight and a half, 9, 10% decline. This is coming. I can see it. If you put a time here, I don't know because oops, none of that time was gonna come into a play because we don't know where the high is. See, 23.6, but you're June 15 right there. But it can change. That's the minimum, but this is a daily time frame, so it's each day is one bar. It's gonna be like a minimum price and time relationship between the 5,500, 23. It goes all the way up till June. I can, I mean, right now that a lot of, we're like screaming about this price action, that is so choppy and so back and forth like this. Wait till this. It's gonna even worse because this is one larger degree. I didn't post this thing anywhere, and I'm not gonna do it either because so many fucking guys are getting in my nerves. We have a higher bar for the year, so You never, I don't know. I'm watching. So I have this zone here for now. This that I built. You don't, this 2261.8, 3 versus 1. Yeah, 161.8, 200, and 261.8. These are 3 versus 1 of that one higher degree. This wave card looks really good. Look, yeah, 1 here, 2 here, up and 1, down and 2, right? A bit of an overthrow is okay. Um, Look at 3 versus 1, 161.8 right there. See? And now you have fourth wave, 38.2 to 23.6, 100% relationship, 4 versus 2. It's pretty close. So you have that one done. And then from here, what you're trying to do is trying to measure this wave 1 with this blue 5 of 1 off this 3 of this higher degree. And then you're gonna get this fourth wave into a summer that will last a couple weeks and couple months. Not gonna be quick. This fourth wave can even depends where it's gonna settle. Then you get one push right back up to this third wave. That's my plan. Ribs looks really good. I mean, I want to leave this channel the way it is. This one. It starts from this high right there to this low. I want to leave because I'm not doing anything to this channel. I want to leave the way it is. I know it has a lot of overthrow, but the price comes right back inside. And I know it will. It always will. And it's the way that's how channels works. 1 and 2, you see? Connect this two, got an overthrow, price right back inside. Bit an overthrow, back inside. Look, all these highs right there. How is fighting that channel goes right back, come inside, overthrow, back inside, get an overthrow, back. You see, price gonna come right back inside over and over again. It will. Every time it's gonna get an overthrow, price gonna come right back inside the channel. I want to leave the way this channel is. It's a rising, channel. You don't have when you see something like this happens and a price, yeah, and market definitely is gonna put a pretty big top right there for a while, for a very long time. Yeah, we don't have any. There's not a single sign yet for this. So we'll see how it happens, what happens and how everything plays out. But yeah, we're gonna be doing a lot of hedging for some time. A bigger picture. So what we're trying to do now is to find this part that we have here. Yeah, because now from daily you're gonna jump to a 1 hour, 2 hour chart. So now you're trying to see where you could end. I have a different color here. What color do I have there? Green. You make this one green as well. And they will match. Oops.
¿Cuánto fue eso de lo del inventario? Digo, el email ese que mandaron para saber dónde está el inventario.
So then from here, This is what we're fighting for right now. This is what will come into a play into a summer. So a lot of those a lot of people is going to start calling for a crash or this and this and that. Yeah, just that's going to be a very good um, buying opportunity. 56.69. Yeah, 56. Good. I'll leave the way it is. So for now, we're going to see if we could complete this 5 waves off 5-way move from October low. Okay. But we all know that. Look how Elliott 5 up, 3 down, 5 up, 3. I mean, this is a triple combo. Consider as 3 down, 5 up, 3 down, 5 up. What do you think is going to happen here? 3 down again. What happens after that? 5 up. That's why Elliott is so fractal and so good. It's just a repeating pattern. That's all you're doing. Elliott is very fractal, and market is fractal, right? 5 up, 3 down, 5 up, 3 down, 5 up, 3 down, 5 up. It's a sequence. Just keep going and going and going. It just makes higher and higher and higher degree labeling for you, going up. It completes one sequence, completes one 5-way move, make the 3-wave correction. Then you go another 5-way move. Then you make another 3-way correction. Then you get another, So the higher the smaller degree gets higher and higher. That's why you have all these degrees here. 5 micro makes 5 subminute. 5 subminutes make 5 minute. 5 minutes makes 5 minutes. You see, 5 minor makes 1 intermediate. 5 intermediate makes 1 primary. So it's all of them you have to just look as 5 to make one of the 1 higher degree. 5 of these makes 1 higher degree of primary. 5 primary makes 1 higher degree of a cycle degree. 5 cycle waves makes 1 super cycle. Then you have a grand this and nobody goes there. Those are like decades and decades long. Cycle is the most you could go to, which I did it here. It's a cycle degree. You took a look at that from 1950. So still got still got plenty of room to go. So we'll see what happens. These are monthly bars. So we're just gonna leave the way it is for now and see if if the breakout happens, I mean, this is what we're looking at right now to see if this happens in the next week or two. If seasonality comes into an effect, into a play, some news is gonna break out, whatever's gonna happen, the next 2 weeks shows a bit of a weakness, then we'll see what happens. But the thing is this, that the market is just kind of is choppy. We can see it here. It's very range bound. As many bulls like to see a clear move to the upside, it happens and it rejects over any kind of a tariff news or any for all kind of news. There's no clear breakout yet. not on a weekly time frame, not on a 2 hour, 1 hour time frame or daily time frame. I mean, we looked at a bunch of charts before. I mean, what you can make out of this? How could, well, you just want to play one single session to see if we can get lucky. This is not a trending market. It is, I don't know how other people look at them. This is not a trending market, period. It's just a sideways consolidation. Sideways consolidation with options, it's not easy. You're just making these U-turns. Like, look at V-shaped recovery, like down here, boom. Look at that V. Perfect V. It's pretty much same thing here. Okay, that's how the sectors look. Real estate is back here. The consumer XLY is weaker. Amazon is puking nonstop. Tesla was, we just had that week. XLY is losing momentum right there. Energy starting to close the technology. Qs are ready to rip. Look where technology was here a couple days ago. Communication is, this is where you have your Meta and Netflix and Google. Industrial is, mm-mm. So we don't have anything in this part here except for energy, that everything is just kind of like rotating in and and at the same time is rotating out. This is out industrial. If you look at from here, the Caterpillar is weak as well. I was looking at it. Communication right there. Financials are weakening. See? So does the material. So the only thing that is left is just the real estate is the only one is behind. I had that trade. We did a trade on EMT. Yeah, did we close it? Yeah. Um, I
So
like
Mo,
I like
how
that
come
stock.
how come Meta and Netflix are still going up while the
The earnings,
RGs are deteriorating?
it takes time. I mean, where's Meta? Right there. Here's Netflix. So Meta is up for 20 days. Here's Meta. Very high swing as well. 13th. Okay, we'll see. NVIDIA failed at 11. So this one is at 13th now. So we'll see. Um, oops, days up 20. This is history right there. The stock is up for 20 days in a row. This is insane. Look, never happened before. And it has never happened in any Mag 7 stock. So this stock has been up since Trump got elected, become a president, every single day since he was sitting with Jeff Bezos' girlfriend. 20 days. This is crazy. I never see this is, you know, gonna get marked in the history books. Never been 20 days. Look at that. We got all the way back to 2012. It's crazy. Never seen Apple has never rallied 20 straight days. So does Nvidia or any other stock. So Meta is here. Meta 645 and 650. It's hard to, I would, if it's gonna come down, it's gonna come back right down towards 700 mark. That's the bet that I don't know. It's hard to sell tops. I could I can pick bottoms really good because I have um those those mean reversion signals. But picking tops is just not easy. I would I would do this 745 to 755. Take a 10-point risk. That's the 10. I would take a 10-point risk on Meta. Take a 7, either here, what are we at? 740.91 was the high. 745. So it's a 10-point risk. Yeah. To target this or this low right there. Or take like a 700 right there. That would be a little less than a 1.5% risk of 10 points for a 5% move. But every time Meta comes down, it rips right back up. There's no down days. The stock has no down days for 20 days in a row. It's crazy. Netflix, seventh swing. Okay. Let's see. Almost there. 1059, 1064. This is due for a bit of a pause. The worst case from here. This is a 200. This goes to 261.8. That puts you at almost 1133. I don't think you're gonna go there before. Yeah, this 200, you're not gonna clear that easily. So this one, I don't know. It can go up to say 1100 as well. You don't know that. I don't know. Higher bar is something like this. Say take an entry at the low. I would just target something like this. Just come down to this fib. All you do is look reverse from here to here. Yeah, but the thing is where do you put your we don't know the upside. Because if you play the bottom, let's say if you have the bottom, right? And if you pick something here, you can scale the upside. How are you gonna you see it just makes tops are very difficult. We don't know. Because we know the low, right? And then you can take an entry, see if we can hold the low, and then you could project the upside. But picking tops and then assume like, oh, there's going to be a big huge drought. Yeah, good luck with that. I don't have a top, those mean reversion signals. I don't even know like how to set them up because your upside is we don't know the upside. How much? Who knows where the market is going? What S&P is can be. Well, everybody had their upside targets. Could be 6,500, could be 7,000, could be 8,000. Some probably saying thinking is going to go to 10,000. I mean, I don't know how many years it's going to take. But downside, at least we know where our support is. We know our prior resistance was. The broken support was that will act as a resistance on the way up. We know the closes that we need in order to make a higher high because we're just looking for a previous swing high for the price to make a move up. So it's different. It's just now if we look, here's your clouds. Does it look bearish? Look at some of these stocks. Now here's Meta. Look where the cloud is, where the price is. I mean, a lot of traders, I'm sure they look at these these whatever you call Ichimoku clouds and stuff. They have this S&P. I mean, this is what I'm just saying. Is like, what the hell is so? There's nothing bearish about this market. Here's Nvidia. Look at that. That's your resistance line right there. That's what I'm saying. This zone right there is where Nvidia is gonna make the decision. What was this? The gap fill at this 144, the 78.6. This. That will give the confirmation that the price does manage to close above the cloud. That's one. Second is that it finally broke the 78.6. The 78.6 is going to break. You have a pretty good chance that you're going to take out this double top. That's the bet on Nvidia. If it backs off from here, from the cloud, and from this resistance zone, and then we could expect something that the third swing is going to come into a play because this second swing will stay as is until it takes unless the price goes above and take out that previous high swing. It's going to be due for some sort of a third swing to the downside. What's that? Nvidia is a little tricky right now. Plus, they have earnings. We don't even know what the earnings are. How the earnings are going to come out. Apple, second swing, trying to make his way out. It will be due for the third as well. Some of these swings, I know, they're just Microsoft down in one. It's so damn range bound. Below the clouds as well. And Microsoft just, I don't know. What is so when Netflix, Meta, this, Amazon, that's good. Amazon is a buy. Amazon definitely is a buy. See, it consolidated here, broke, trying to come back down here. Let's see, it yeah, 227. That's a 23.6 from this low right there. And then I would pick a leap on Amazon. It's 218. Amazon is ready to pop. I think this is the one it took a, jeez, where is my, I think it's the one who took a beating on earnings. This is to watch. Right there. See if we can make a move. Okay, I'll keep an eye on it. I watch them. I mean, I have them on the 15 minutes. Google. Look at that. That's a 14th swing down. Yeah. Remember, Meta is at what, 13th, right? It's just, I don't know. It's just, this market is, yeah, 13th. Google backed off on earnings from 13th to 14th. Now it's looking for a 15th swing to the upside. And if that 15 can go up higher or 15 fails, whatever, and then it has to take out one of the previous swing low for the number to reset back to one. You see how high the swing counts are? 1, 2, 3, 4, 5, 6, 7, 8, because the prices keep making higher highs and higher lows. See, higher low, higher low. These are all 2, 4, 6, 8, 10, 12, 14, 16, 18. They're all higher lows. Then higher is 3, 5, 7, 9. 11 was a failed swing because it didn't make a new high here. The 12 settled here and then it took out this high. Yeah, whenever you're gonna see this line turns green, so the swing turns up. See right now it's red. Right there. So this, and then Tesla is in a 6th swing, looking for a 7 to the upside. See, it's got it closed 2 days out of the cloud at that 326. And the last 2 days, on Thursday and Friday, it managed to creep right back inside. See? So for now, based on the ATR, the minimum upside target is 390, like call it 400 for now. So the only way you're gonna see this high of the Tesla, if this low holds, you need to break 253. This. As long as this low holds, the high is there. The 253 is the one that would press toward 488 to 532. You just need to hold a damn low. Now, if this low make another low, let's say to 311, then this will become 450 for the upside breakout. So the retracement will move lower. It's because I don't like if I like sitting and looking at a chart, I can just simply count this as a three-way move. That's it. And now, I mean, if you looking at like this is one, this is two, then this is three, this is damn very subjective. Nobody does that. You put like something like this. That's what I have. Like it takes so much time. A, then you can do a B, then you can just do something like this as a C. It just all I need is high and low. That's all I need. You can just project the upside. Those are your upside. So what difference does it make if it has to be in a wave count or if it's here on a swing count? It's the same thing. It really is the same thing. No anything see, there's no signal either. A go, no go. Yeah, it's a flat week. We gotta wait. Can't overreact. Just stupid Tesla is gonna like brain fog you every single day with the price movement. And I think most people are watching Tesla than actually paying attention to other stocks. You know, I look at them. I was like, okay, fine. Just I had them open on the side, but just try to find some new trades. Um, uh, Everybody wants the perfect bottom, or is it the low end? Well, I don't know those lows and highs. I mean, look at here. This is like a bit like a more of a freaking. I'm just taking a pattern, but like technically the inverse head and shoulder, okay, works on the bottom of the chart, not at the top. Okay, so you cannot really put a statement here for an inverse head and shoulder. It has a like um just call it as a fractal chart, but the inverse head and shoulder cup and handle is different, but the inverse head and shoulder don't happens like this. It happens on the bottom of the chart, like something here, you know? Yeah, they don't form like this. It has a perfect look for it, for sure, because inverse head and shoulders gotta consider as a W patterns. Okay, that's what it is. So somewhat, God, I don't know how to draw this. It's not a V because you have two right sides. It goes like this. So they forms on the bottom. No, W would be like this. I take it back. No. Yeah, but I just looked at them, I was like, looks pretty, looks really nice. Basically, you have a good balanced volume on both sides. That's exactly what you want. And when you're looking for an inverse head and shoulder and a head and shoulder, you want a balanced volume on both shoulders. And then this is your head right there. And then that's your neckline. And that's what you're looking for. Price to make a move higher. But the point is that inverse head and shoulder always form on the bottom of the chart, not on the top of the chart. But this one right there is good. You got this, this, and now you see how huge that candle is. What did we put a doji candle up on the top Friday? Yeah, look. Here comes a little doji. Ah, oh. Dojis at the tops are pretty something to watch as well. See this the SPX cash index didn't made a new high, but the SPY did. ETF made a new high. S&P cash index didn't. Weird. Keep an eye on it. This is the third like if you look at a daily time frame of a cash index, this is like a third wave, third swing to the upside. This is your October low, April low. I mean, this is your August low. This gold signal sitting right there at this low right there. Even took a dip right there, but there's no go at all. Those are sort of like a sell signal anyways, because it's not time to go. They're like bunch of, this one is a failed one. A bunch of a momentum oscillator and all that kind of stuff. Some of them are good. Some of them are really good. Now, if we look at last week, that's not this. Higher bar scan last week. $196 stocks has made a higher high last week out of 500. 500 stocks of an S&P 500, there's 196 stocks and made a new high. I mean, not new high, sorry, made a higher high. So now if we take a lower bar scan, 193. So last week was mixed. Half went up, half went down. And then how many stocks was 196 against 193? You see, like the market breadth is like neutral. It's not like fully like more, you don't see like over a 300 stocks as making a higher high, well, versus 100 stocks and making a lower low. Those are the numbers are you wanted to see is when the actual like most of the 500 stocks that rallies with the with the benchmark. Now you got inside bars where stock hasn't done anything for the whole week. 72 of them. So these are all the stocks. Accenture, AMD, big right there. Amgen, Broadcom, Exxon, Auto. These are the stocks that made done nothing last week. Dollar Tree, Equifax, Estee Lauder, Enphase, Corning, Goldman Sachs, Eli Lilly. And none of these stocks has done anything last week. Pepsi, O'Reilly, Ralph Lauren, Vistra, Wells Fargo, Willis Tower, United Healthcare. You see, like a lot of these stocks, like United Healthcare. That's the main driver for the healthcare. The the volume EMD, and then anything last week. Broadcom is the same thing. It's just struggling to break that 235, that liquidity zone. I don't know. I'm gonna If the stock split, these man, I hate this. Come on. I gotta go to a smaller time frame. You guys want to look at any charts today? You can um, write um, write on the chat right there. Like this is this. Broadcom is just fighting this one. These are daily. Like how many times is this? It's gotta. I don't know. NVIDIA. Well, NVIDIA is not gonna report next week. A following week, we'll see. Because NVIDIA is gonna move. It's gonna move the entire shape semi market for sure. But if you um, look here. What the heck is um this thing is done. I don't know. Look at SMH. What is this? Somebody can just explain. Like, this is crazy. Where, what is like, now if you go back, I mean, this is bearish. I understand that we have taken several dips to the, but look at the price. And this is since July 11, right in the bottom. Oops. I'll show you the banner as well. July 11, 2024. if we, let me see, just came in my mind. Look at Microsoft with SMH. You see, this Microsoft has become an AI player. How perfect this, look at this. How Microsoft and semis are like literally like holding hands. There's a bit of a gap here. It's okay. Think Microsoft is just it's an AI stock now, to be honest. What I wanted to you have this. Yeah. It's a big difference. There's Q's up there on the top. Q's, semis, Microsoft. Hmm. Meta 25.82, Netflix 18, Amazon 4, S&P 3.96, Nvidia 3.4, Google down 2, Apple down 2, Microsoft down 3, Tesla down 11. Here's my Qs are being led by Meta and Netflix. That's how I see it. The rest are just, it's a flat show. And a sector-wise, the communication is the one is leading the board, 8.7, financial 7, materials, wow, 6.79, healthcare 5, energy 5, utilities 4, industrial 4, real estate 3, XLK technology only 3. Wow. What is driving this market? You know, if the tech is not leading, like a communication has more than double than the XLK. So 3 to 6 to that's 8.79, consider almost 9. XLY, that's the worst one right now. It's only 1.18%. XLY is where you have your Tesla and Amazon. I gotta look at the data as well. Tells you everything. Here's the S&P 500, 3.96% so far. Well, the positive sign for the overall market is all 11 sectors are green. That's the positive. So you cannot say that this whatever 4% upside, 4% year to date so far for an S&P is not being led by, and sectors. Yeah, all 11 sectors are up. That's the positive side for sure. Well, it clearly tells you two sectors or three sectors that are leading the market is communication, financials, and materials are the ones who's helping the overall market right now. Especially communication and financials. They're the one who are into the 7 and 8% compared to the other ones are all into a 6 and 5s. So we have 8, 7, 1, 6, 2 5s, 2 4s, 2 3s, 2 and 1. Okay. Find something. I didn't do much. Yeah, 2 days I just relaxed. What was gonna do? And decile, Tesla, UPS, Merck, PayPal, DHR. These are the stocks has taken the most beating lately, which we all know that. Merck, that's the dip right there. DHR, that's the dip right there. Tesla, I already looked at it. PayPal, this move down here. So these are the ones now they're further away from the benchmark. These are the ones that made a big move to the up. Meta, of course. T-Mobile, this move. Starbucks, this move. See, all these particular stocks are gonna have the biggest move because these were the ones that actually were in the 10th decile away from the benchmark that had made the biggest move to the upside. IBM, Philip Morris. See, but all of them have those acceleration gaps. So pretty much they're like earning plays. So these are the ones that are gonna eventually, when they will recover, are the one we'll see these are the stocks that has more alpha. That's basically what you're looking for. Ninth decile we have AMD. I don't know, man. Just you gotta have to convince me or sell me hard on this company because I'm not sold on this company. To me, consider it a failed business. It's a cheap way to make those GPU, whatever they make, that no company wants it, except for kids who play video games. There's no demand from Amazon or Google and these kind of a companies. They're buying Nvidia. They're not buying AMD. So it looks pretty damn promising. I can throw a trade. I don't know. We can do AMD or we can do Micron. Let me just looked at it before. I can do either one. So this isn't a night. This is gonna move. So does the GM. GM we can look here. So I don't ever trade this stock. I don't even know how much it moves. Swing is this in? Ah, has a failed swing. Got resistance here at 49 to the prior swing. We'll never know, it can reverse. It needs to break above 55. Abdul. Eighth, Cat Ford, FedEx, Comcast, and Nvidia. So Nvidia isn't actually in eighth. These are S&P 100 stocks, the top leaders. Man, look at this move. Seventh, we have Microsoft, TX, and this one reject. This is weak. Target. Dow. Microsoft, we already looked. TXN. Yeah, they just got hit with the earnings. Sixth, Broadcom, JD Corp, Google now. Google, we just looked at them. COP. Coming right back down toward the low. That's it. I mean, the other one's gonna McDonald's, PFE, but no, it's nothing here. Intel. Look at this rotation. Yeah, that's the move right there. Nothing. Jeez, look at this. Look at this bottom. Wow. That's the bottom? Oh, that's the low? I don't know. Gap here. Nah, there's nothing special. Mm-mm. What's so special here? Nothing. I don't like it. Um, Not a lot of stocks. Tesla, fine. We look at them. This AMD. What we can make out of this? Seriously, this stock is okay. Let's see. What do we have here? Let's do. I wouldn't even go that far. No, wouldn't even take that one either. Stock has a very weak momentum. Take this lie. Let's do this. Okay. Now, mark this low. Okay. And the actual low. Okay. Now take the higher low and oops, it's not going straight. Too far. Take, I would just go with this one. Why this channel is not, it's kind of more leaning toward to the downside. This is good enough for now, to be honest. This high is taking these bigger ones. So 121, such a let's see, downswing at 120. I knew it's gonna be that's low right there because this way you had the initial decline. 122. Yeah, well, the low is 106. Let's see what the measured swings are. 15. Mm-mm. I can pull it up here. CCJ uranium. Are you into more into commodities and stuff? Stronger dollar doesn't help those commodities. Yeah, it's just I don't know. Bet on this. Okay. 113. So if we take this to this, 5.75, 7.92. I don't know. It's just a tough stock to be. It just, I don't know. The only um, way I mean, I would consider is just because of this, you know? If this thing comes into a play, which most likely it will, because it's due to get out of this lagging quadrant anyways. So we could catch few points, make a spread on AMD and just hold our breath, hope for some news to come and cross the wires and that's it. There's not a very strong technical case that I can make. 'Cause this days, couple days of that bounce, it's very weak. It's a very weak bounce from the low, you know? It just try to get to this high or something. I mean, yeah, this a matter of making few points. Yeah, but the stock is clearly to the downtrend on every single time frame, daily, weekly, monthly, yearly. Everything is down on this stock. Um, Nothing really that excited um about AMD. BCJ chemical carb. What is that? 47. Oh, you know what I can do? I have all different time frames right there. I can do, what is it called? CCJ. Do these. Daily swing is down, weekly swing is down. Okay, it closed the week with an outside weekly bar. Okay. So I a stronger dollar. If he's a commodity play, I don't know what are you looking for. This is so 1 point stock has a very low ATR. In 1 point, weekly has 2.5 points. So stocks only move like dollar or 2 points. 2 points, 2.5 points for a week. So it's a very low ATR play. I mean, if you I mean, it's definitely looks more like a if we count this thing as as a wave count, okay. I mean, we can definitely make 1, 2, 3, 4, 5. We can just put like a 1 here, some sort of a 2 if you can find some support here, and then you can make a case here for a third up to the upside. This is a clear 5-way move. I can count. So where we can find support. Okay, let's do this. Take this swing to this low, not to the very low. Okay, let's bring some. Okay, so we're gonna work on this zone first. Okay, so watch this one. You have no go here. That's if just, all those algorithm signals. That was a good one right there. So you have a no go here. Swing is down. Stock is consolidating here for now. Watch this 46, 49. Okay, the stock only moves like 2 points on average per on a week. Watch this 46 closely. If you're gonna break this, you have a pretty good chance that it's gonna in the next week or two it can get down to this 41 area. It's gonna be a deep retracement. So that's this. And then what we can do, we can run this swing to this high, and now we're gonna make this zone. So now you can get rid of some of these other ones. We don't need these. See, now you have another one in between from one swing to another swing. This, oh my, this one, this one in between. So you take these two swings, and then you have the largest one. This is your zone. You can see exactly where the price is fighting right now. Came back up, it's just now just watch this. If the price, well, you need a higher highs, first of all, for this swing to turn back up. You don't have that. So if you gonna buy something that you like this, or you're just gonna wait, well, that's a different thing. Or would you just rather wait for a positive, like some sort of go signal like this, swing turns up, and then you can look for the continuation to the upside. So just watch this for now. That's the only thing I can tell you. S SMID. What is that? SMID. Now this is a good one. This is a good one. The swing is down, okay, which is fine, but this is a 1-2 swing. You see from this the fifth swing which failed. Okay, so it has a potential to make a move back to the third swing. It has two higher highs As you can see right there, it needs one more. You need 3 bar swing for swing to turn up. So it has two, this one and this one. In this case, we can take this one to this. You see, the 78.6, not gonna break that easily right there. 78.6 at 35 area. So you have a very good support here. Now it's at 39. So that entry is gone. So now what you're looking for is to see if you could break this channel. Now with the initial low right there. Right. What is going on with that channel? Thing is off. Connect this high to this low. And then this. This was the initial decline right there. So you always take the first initial decline to your lower swing low. And then you can project it from the top. This is still not right. I don't know what's going on with the channel. So yeah, look for this. You can do it. You can do it from here as well. From here, take this and these two. I cannot draw a damn thing here. This and this. You can do this as well. That's the swing, the first initial swing low right there. That's your lower high, and that's your lower low. So you see, you have positive. It needs one more. It needs one more daily bar, and then you could try to see if you could get to this print here, 44.63 to this swing high. Yeah, 44.32 sitting right now for this third swing minimum target. So Smith Midland, is it a real estate something? Real Midland Corp. So this is good. This is something you can consider. As long as 78.6 is held really good, got a bit of a pop, nice bounce. Oh, it's a material stack, precast concrete. It's gotta be material. Materials are good, doing good. The third strongest sector right now. CCG. Yeah, did we look at that? Yeah. Yeah, just watch that zone. See if FCX. Oh boy, that's a Freeport macro. Got a bit of a bounce, got a go signal here. Going up in a second swing. That's a clear 5 wave down. I can just count it with my closed eyes. 1, 2, 3, 4, 5. This could be some sort of a fourth wave coming to a play. Then take one more leg down. Okay, let's see where we can find upside now. Go up, bottom to the upside. Now we look for one. We already cleared this one is out. So look for 38.2, 41.65, and then 43.75. That'll be 38.2 and a 50% retracement of this. And we can do from here to this high right there. We can pick the same one here. Here you go. So we don't need. So now we got this as your first zone right there. That'll be a second. Then that's third. That's, you know, you can just stack them up like this. Yeah, I mean, the volume definitely looks nice. This was a very strong volume day. Not here much. This one was. That's where this go signal triggered as well. Friday was good as well. Kind of bit of a took a reversal. Yeah, this one is FCX is definitely showing some good, decent volume. That's a good sign. If you have buyers are coming in, taking it, you know, volume more than average. Oh, the Caruana. CVNA is what the Caruana? With an 11 swing right now. So if you looking to play the upside on this, you just gotta take these two swing low is more than enough. These are daily time frame anyway, so don't. So if you're looking for an upside, 293, 325. It's plenty of upside from here. Just take 268 and 175 low swing for this swing right there. So you're just trying to project the upside from here. So 293 and 325. And if the price rejects, takes out this low right there of this 268, and then we're gonna have to see, then we have to look for the downside. Okay. So that's your Caruana. This is in, swing is up, go here. 9.14. That's a pretty strong pop on Monday. Sorry, on Friday. Volume was good. Somebody was saying that they're cooking their books as well. I don't know if it's true or not, but so that's your Caruana right there. Watch, you can take a snapshot of this 293. I mean, it's almost there. And then 325 to 361. That's all your upside. And then to the downside is if it's gonna start, if it closed below 268 on the intraday, then we can run downside retracements. Yeah, I'm not labeling this thing. There's nothing to label. You want to go up, that's your upside. You want to come down, we can always run retracements. DKNG. Man, you guys watch some crazy stuff. I'm always stuck with these top 50 stocks and stuff. DKNG got a big pop. Let's see. We can do extension from this. There you go, 53.38. So we're at 53.61. Next up is 57.50. Okay. It's a pretty nice target, huh? 49 to 53. Almost there. I mean, this kind of a pop right there, you have a pretty good chance that you're going to have an inside week. And it's very hard to chase more upside when you have this kind of a monster move. You know, because the earning move is pretty much done. So you have 3.46, 4 points here. So the stock, moves, I mean, a 1 standard deviation move is 4 points. Okay, so the 4 points of 1 standard deviation move, and then stock in 53. So 57 definitely would be a 1 standard deviation move. And then from 53 down to 49, that's a 1 standard deviation, so it's 4 points. So just watch 53.38. This is where exactly where it is right now. Your upside 57. That's your more upside. DKNG massive volume. Ooh, damn. Huge volume. INOD. What is that? Seventh swing. Looks good. Swing is up. Now you're looking for a breakout. Stock has consolidated to the sideways here. That's your upside. 61, 55, 69. This stock moves 5 points. Definitely just put a double top there. You need a breakout from here. A lot of buy signals on this. A lot of no, I mean, yeah, your upside 61, 69. That's your 78.3. So you have a pretty good chance you're gonna get to a 61.55. That'll be a minimum upside. Yeah, swing is up. This looks good. I don't even know what is that. Sophie. Sophie's good. Whoa, got a ghost signal triggered here. Nice volume. Yeah, stock is sideways. This stock will. Let's see. Take this. Yep. See 78.6 held. You need to break. It needs to break 1728. So 16. Yeah, as you see, it's sitting right there. That print is. So try to. The swing is down because the four. Let's see the third. Look at the size of the first swing. That's your seventh. And look at the third swing. It's very small. Very small. It doesn't have rules of Elliott, but third swings usually extends quite a bit. So you gotta defend this low. This one held, which is good. Got a bit of a pop. Nice volume. Look for this upside for now. 1728. And if it breaks 1842, then you can let me know. Then we can open up more upside. But for now, there's no point for it unless the swing makes a higher high. It needs to take out this swing high. It needs to hold the swing low, but it needs to break this if you're bullish. It's all about higher highs and higher lows. It's all about that's what all swing trading is. It just cuts the noise, all the BS of the labeling and stuff, to be honest. It saves you tons of time. This is that's the second swing here. Got a five waves up here. Got a 1, 2, 3, 4, 5. You got 1, 2, 1, 2, 1, 2, 1, 2, 3, 4, 5, 4. See, that's it. This is, you can easily count this as a wave 1. Oh, this just starts from F failed swing. There's a clear 5 waves up. Okay, so previous swing high was 95. Okay. Now we would run this to the low because that's what the swing low was. So what do we look for? That's your zone right there. Mm, This, that's your first zone. It's stock moves. What is Astro? Oh, that's a healthcare. Oh, AB. Oh man, this thing is losing momentum right there. What was the hook? Hang on. Yeah, that's not a good sign. Stock might have a little bit more weak. If this thing is gonna reject from here, see, it made this move. I think it just got out. It backed off quite a bit. So it moved up 39.7, backed up how much? 24.7. I mean, I don't know if you trying to play this thing with options. I would just go with shares on this stock instead of with option play. If you have the flexibility and stuff. This thing can torture you for some time. So I'll watch this for now. We'll see if it holds. Because I don't have the print for the third one yet either. I think this just got settled probably on Friday or something. Yeah, remind me on Monday or Tuesday or so. These are the daily time frame. So keep that thing in mind. This is not something just gonna change in a matter of a day or two. These are one day for one single bar. It'll take time. Snow. I'm watching snow. So I know what you. I'm watching this snow. I'm looking for this swing breakout. I don't know when they have their earnings. This 196, 207, 220 is the upside on snow. And it's in a third swing. The third has to make a move up. A little bit more room to the upside. They have, I don't know if they have earnings or so. I don't know. But that 200 kind of like two earning on 26. Yeah, like 200 and 205 or 205 to 210. Like a $5, 200 to 205 or 205 to 210. Those are the two spreads that I would consider on this stock. So I mean, I don't know. I don't know if it's gonna fail, but the thing is this, that you see how the stock is recovering from the low. You see from here since 2024. So that's a look how the stock has been doing. It's gonna take some time, but I don't know how strong their fundamental, like, how the report looks like and things like this. You see, you have a accumulation to the downside. That's the distribution phase. Then it made another low, right? All the way down here. So now what you're trying to do, you're trying to see when it could make the reversal back up. You got a huge earning gap here on the previous earnings. So ever since pull back now at 3. I know the only you have this gap sitting here, and man, this stock is full of freaking gaps. This gap right there to this 226. This one fills at 226. 194. Yeah, it's just sitting right there to this high right there. Let me do this. We could just fill this. That's your first zone right there. There it is. 8.6. Do some extension. Gonna come pretty close. Move all the flat line. Just I was kind of rearranging some of these folders I got rid of. Where's my box? Here. You have this. You have one here. What you're looking for is a stack of uh, fibs. Okay, cluster of fibs. Some of them are pretty strong fibs. They're just gonna, that's your 3 zones to the upside. And what you're looking for is clustering like multiple fibs. They all kind of come close, like stacked, against each other. That's how you build zones. You watch this, is because you have multiple fibs sitting like 100, 161.8, 200, 0.618, 78.6. Like these are pretty strong fibs, There's some price always is gonna show some sort of a response. Like once it's gonna get to that mark, either to the upside or to the downside. Selling mostly stops around 200 to 261.8 as well, most of the time. So snow from the cup and a handle, or you were looking at this way? Nah, I mean you need like it depends what you're looking for, but you need to at least get some hair up on the top to create to form an actual something like this. There you can expect a candle, like you need a bottom get to at least to the near to the top. You can poke a little bit, but not all the way up here. And then if the price starting to form, but in here, handles you use to watch the volume. You need volume spikes, several of them, because you have back and forth. Then from here, this thing breaks. It's a very common pattern in a technical world. A lot of people look for these. I've nailed a lot of them. So yeah. Yeah, the handle always forms the bottom. Some of them are just like a round, just a round pattern goes all the way back here, kind of bit of consolidates and just rips right back up. But again, it's all depends on the volume. You guys focus more on volume than price. It's not other way around. Volume comes first, then price. It's not first price and then volume. This is everything right there. On a day-to-day basis. Or you want to do a while, 15 minutes or 1 hour or whatever you wanted to watch, whatever time frame that you're watching, you have to watch the volume. Yeah, price will move on its own. We can make several zones up and down. That's not a problem. Brim of the cup at the bottom of the gap 194. Yeah, I mean, I don't know. Are you looking at daily time frame? This is daily time frame. I mean, I don't know how. If you just doing this part here, that's different. If you just taking this is different. I mean, if you just going far back, it's just the way. But you just only playing this swing anyways, because if this goes like this to the downside, you're gonna have this -1 swing anyway. So you need to hold this low. So we'll see. It all depends on the earning. I don't think there's nothing going on in the volume. It's dead, as you can see. See, there's nothing here. Not something. So we just had this stock just got has to. The stock ATR is 2 points on average. 2 point per day is a one standard it's a one standard deviation move for this stock. So we gotta wait for earnings. That's the pure earning play at this point. Other than that, it's just gonna sit quiet. Okay. I'm gonna stop.